Well, it looks like a gold squeeze coming from London clearing banks may not happen from due to the instilling of Basel III. Now, this topic was given to me by Ivan Gaeta, who asked, do you have any insight into what is going on with Basel III? It sounds like London just got exempted. And pretty much that's what happened. Now, for those of you who aren't familiar with Basel III, in the long and short of it for gold and for gold stackers is that before pre Basel III, gold was considered a tier three asset, which meant it was risky. And now it is a tier one asset, which means it's as risk free as, wait for it, cash and currencies. So gold is essentially going to be viewed in the way that it has always been viewed in millennia past, which is really interesting to see when you take into consideration that U.S. bonds over the last 10 years have seen net selling as opposed to net purchases and net buying. And this is important because central banks have been buying US bonds um, traditionally. And now it looks like, in competition with them buying US bonds, they may be poised to be buying gold and adding that to their balance sheets, especially now that it will be considered a tier one risk free asset. That is a bullish sign for gold, as more buyers will likely enter the fray. Now, check it out. In May, uh, more central banks had added gold to their reserves. Thailand was one, Hungary was one, Brazil. Brazil jumped into the gold market in May, buying 11.9 tons of the yellow metal. This is the first significant increase in Brazil's gold reserves since 2012. Its total holdings now stand at 79.3 tons. That's the highest level since November 2000. So that is an insane look for Brazil, in addition to other countries that are jumping into buying gold now. Obviously, prices are lower, but this is essentially a bullish sign for those who are looking at gold as savings. And if you look at cash and currency as savings, as maybe some used to, years ago before um, it started to depreciate, gold will now be looked at in the same way. And as I always say, you know, do what these central banks are doing when it comes to savings. Look at what they're doing. Are they putting their capital more in risk free bonds? Are they putting it in gold? What are they putting it in? And over the past decade, we've been seeing large players who were traditional large buyers of US bonds become net sellers. And we're now starting to see more countries get into gold. And with Basel III saying, hey, these tier three assets are going to become tier one assets, risk free, we might start seeing more central banks buying more and more gold, which would compete, which would throw it into competition with cash and other currencies, as far as central banks are concerned, throwing it onto their balance sheets. So that in and of itself is a bullish sign for gold. I don't think we need to be too disheartened by the fact that London has been exempted from uh, Basel III rules and hoping for a gold squeeze there. Again, I think that's kind of, it's interesting. It's an interesting thought to have, but it's a little bit more short term. I'm more of a longer term guy, and this trend looks extremely bullish for the longer term for gold, and even hopefully for more solvency, and hopefully for maybe some other countries, probably not the U.S. Maybe the future hope for sound money coming from some country in the future. Who knows? But guys, let me know what you think about all this in the comment section below. Thank you again, Ivan, for asking that question. If you have any other questions similar to Ivan, ask it in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.